Hello, good afternoon, everyone. I see, I see people are still joining, but we do have a really packed agenda, so I will slowly get started. Warm welcome to today's webinar, examining the state of play of how nature is integrated into sustainable finance policy and regulation. Let me just start with a few housekeeping points while colleagues are still joining. So first of all, the webinar is being recorded today. Please do mute yourselves and turn off your cameras if you're not speaking, so we only see our distinguished speakers and panelists. A quick note to say that views are personal, of course, don't necessarily represent representatives of the institution speaking. Also, to preempt the Q&A, we will be able to share slides with you. And there will be a Q&A. We have a few minutes set aside for Q&A, so kindly hold off with your questions until that point. But do feel free to share away in our chat. So with no further ado, let's get started. My name is Laura Canasta Costa from the UNEP FI Global Policy Team. It's a relatively new team at UNEP FI that seeks to strengthen engagement with financial regulators and supervisors and to foster progressive and proactive regulatory action that's informed by, most importantly, by practitioners and by our industry membership. I'm joined by Lana Ollier and Maria Castillo from the ECOFACT team as co-hosts of today's webinar. And we've secured an outstanding set of speakers to share their insights with you this afternoon. We have Marie Gavet, a sustainable finance specialist at the Banque de France. We have Stuart van der Zwaag, Senior Sustainable Finance Officer at the Nederlandse Bank. And we have Rona Turnbull, Climate, Environment and Emerging Issues Lead at NatWest. And I'm also kindly joined by my colleague Romy Rödicke from the UNEP FI Nature Team, who will share some thoughts later towards the end of the webinar. So next slide, please. For context, there's a growing recognition that finance plays a crucial role in enabling a transition to a more sustainable economy and society. At the same time, conducive framework conditions are an important enabler for achieving global sustainability agendas. And in this context, it will be no surprise to this audience that we do observe a steep increase in the number, but also in the depth of sustainable finance policy and regulatory measures, both in developed and in developing economies. The ECOFACT Policy Outlook tool has logged over 780 sustainable finance policy initiatives as of February 2023. And we believe that global leadership is necessary to encourage the development of well-aligned and also effective regulatory and supervisory frameworks across jurisdictions. So we have designed a webinar series together with our partner ECOFACT to deep dive into a number of these thematic issues and to help you really make sense of this environment. Next slide, please. So why are we discussing nature today? The WWF Living Planet report that was published in December 2022 estimated that almost 70%, there's been an almost 70% decline in wildlife in 1970. I do remind you to mute yourselves, please, if you're not speaking. It's estimated that roughly half of the world's GDP is at least directly or moderately dependent on nature. I do want to briefly say that there are obvious shortcomings in attaching monetary value to natural capital and ecosystem services that don't fully capture the intangible and the non-material benefits of nature. So that's something we always have to keep at the back of our mind when discussing this topic. But despite these challenges, it's clear that urgent action by world leaders to halt environmental degradation and biodiversity is needed. And we're here today because the role of finance in both sustaining and finding solutions that address biodiversity loss is becoming ever clearer. And in that context, central banks and supervisors, as well as financial regulators, have begun to explore the macro and micro prudential risks and opportunity associated with nature loss. So in this webinar, we will explore the tangible examples of sustainable finance policy and regulation that are necessary and have already been taken to accelerate action on nature and biodiversity. And we hope to explore a number of topics, banking regulatory implications of the recent Montreal-Kunming Global Biodiversity Framework. We will discuss mandatory biodiversity disclosure obligations in various jurisdictions, emerging best practice around supervisory guidance, and also briefly touch on the extent to which biodiversity is a feature of sustainable finance taxonomies. So we will hear from ECOFACT, but before we do that, I wanted to quickly make sure everyone is awake and represented on this webinar today. So we've prepared 2 quick questions on Menti that if you are interested in doing that, participate by going on menti.com, entering the code that you see on the slide, and we will ask you 1 question about your background and just 1 quick fire biodiversity question. Clemens, we'll give you just a couple of minutes to answer those, and we're really curious to see where our participants are from today.
Okay, what is it? What over tea?
Water.
Okay, fine. I think it's fine. What over? No. Like the to me, like. Ew.
And just a kind reminder again to please mute yourselves. That would be really helpful. Let's see how we're doing, Clemens. Can we see results yet? Okay, so we do have, as expected, I guess, a lot of representatives from banks, which is really great to see. We do also have civil society and academia represented. So thank you so much for that. And let's see how I see we only have 3 answers on this one. I personally went with stars in the galaxy, but yeah, I guess a reminder to see how the correct answer is trees on Earth, actually. And yeah, I think it's just to remind everyone of the beauty of nature that we're trying to protect and what joins us in this webinar today. So with no further ado, I will hand over to Lana to take you through the key developments on nature-related sustainable finance policy and regulation. Over to you.
Thank you, Laura, and interesting this fun fact question. Yes, I'm joining you today with my colleague Maria, both from ECOFACT. We have been in the ESG space for around 25 years, so before this was such a packed space in a sense, and we're predominantly working on ESG risks and ESG regulation. And this is also specifically what our presentation today will focus on, and we will address here 4 topics. The first one is to go very high level into the Kunming-Montreal Global Biodiversity Framework, to then take a specific look at disclosure, also mentioned in said framework. And Laura already mentioned it, we're also going to take a look at taxonomies around the world, as well as a bit of a deep dive into risk management then. Although deep dive is maybe said a little bit too much, we will cover everything at quite a high level, as we have a lot of things to go through, but happy to take your questions at the end, or if you have questions during the presentation, please feel free to include them in the chat. And with that, let's get started with having a look at the Kunming-Montreal Biodiversity Framework and what was agreed here in December 2022. And this specifically was the outcome of the 15th meeting of the Conference of the Parties to the UN Convention on biological diversity. And this is sometimes also referred to as a Paris Agreement for nature, just marking that this is really a landmark agreement here. And it really is. It has taken over 3 years to come to this point. And it consists now of 4 global goals and 23 targets. And I will just outline here for you quickly the, I believe, most important goals and targets, and specifically those that are most relevant for financial institutions. So we are planning by 2025 to install the integrity, connectivity, and resilience of all ecosystems, and by 2030 to ensure 30% of land and waters are effectively protected and up to 30% of previously degraded areas are restored. This is the famous 30 by 30 target, which you probably already have heard of, as this is, I guess, despite not being one of the goals, really the headline target here, 30 by 30. Then also by 2030 to reduce pollution to non-harmful levels, and by 2030 to also reduce harmful subsidies by at least $500 billion per year, and provide $200 billion per year of funding, including $30 billion per year into a new fund for protecting biodiversity. So quite large sums here that are supposed to come both from public and private finance. For you specifically as financial institutions, relevant will be, however, target 14 and target 15. And target 15 quite specifically calls for disclosure and calls on governments to basically ensure that large and transnational companies and financial institutions monitor, assess, and disclose their risk, dependency, and impacts on biodiversity. This is something we'll take a closer look in a second at, and how different countries are taking this up. And target 14, which is similar to a certain target we find in the Paris Agreement, and that includes a statement of requiring alignment of all relevant public and private activities and fiscal and financial flows with to be aligned with the framework. So again, target 15 and target 14 are here probably the most relevant for financial institutions, calling for alignment of financial flows and disclosure. With that, we will have a specific look, as I've already said, at disclosure requirements in this space. And if we go to the next slide, we see that there's already quite a bit going on, which is reassuring, but also a lot in development, okay? So it is a really rapidly developing space here, and the TNFD is really shaping out to be here put in a central position. However, let's start on the top left here, and that is that the Global Reporting Initiative, the GRI in short, is currently revising its standards for biodiversity disclosure. So the original one comes from 2016, which of course our thinking around biodiversity and nature since then has evolved quite a bit. So they are currently underway of revising this, and specifically they are looking here at location-specific information, which is also quite aligned with the TNFD here, disclosure and management of biodiversity impact and impact across the supply chain, reporting also on the drivers of biodiversity loss. This kind of language probably is familiar to those of you that are already working with the TCFD. Then reporting on changes in the state of biodiversity and an organization's effects on biodiversity, and also its adverse impact on people. So what we see here is a very impact-focused orientation, which is just the core element of the GI, I would say, to look specifically at the inside-out perspective and consider impact as well. The GRI here in its current proposal for this revised standard quite specifically mentions the TNFD, which is where we see on the top right corner here. And the TNFD stands for Task Force on Nature-Related Financial Disclosures and is still upcoming. Currently, we are in the 4th version of this standard, or 4th iteration, with the final one to be adopted in September of this year. And the last one, the 4th one, came out in March, so just a couple of weeks ago, and contains 14 draft recommended disclosures. as well as 6 general requirements. And those general requirements, for example, pertain to the materiality approach taken or the location-specific approach taken here. And this is somewhat different from the TCFD, although structurally the two are somewhat similar. We also specifically have the LEAP approach, which is supposed to support companies and also specifically financial institutions in scoping of priorities and impacts. This is really essentially to hone in what you should report on, what you can report on, and where your central impact and dependencies and risks lie. It also includes guidance on target setting. Of course, the steering perspective should also never be forgotten, as well as draft disclosure metrics for financial institutions. Again, this is just the 4th iteration now. The final one will come out in September. With that, let's take a look at the EU, which is also busy underway of reporting its own standard. That is the ESRS, the European Sustainability Reporting Standard. And although there are different standards that could be seen as relevant to biodiversity and nature risk and impact, the most relevant one here is certainly E4 on biodiversity and ecosystems, which again is upcoming. We are expecting here the Commission to adopt the final one in June of this year. This standard also specifically references both the TNFD and also the LEAP approach. So they are moving quite in parallel here. And here we also see first hints, and we also see this in the first bullet point here, positive and negative material, actual and potential impacts. The potential always gives it away in that this also takes a strong hint at scenario analysis. And then we see here also the first nudge towards transition planning in reporting on plans and capacity to adapt business model and operations in line with international agreements. So here, moving quite in line with what we already know from climate risks. Coming to something here in France that is already applicable, and that is law number 2019-1147 regarding energy and climate, but which also specifically requires reporting on risks linked to biodiversity, as well as a strategy for aligning with long-term biodiversity objectives, including targets for 2030 and every 5 years thereafter. Now, this law in its scope is less broad than, for example, the ESRS under the CSRD would be, but it is specifically also relevant to financial institutions that are involved in asset management. So those already need to report in France under this specific law, and thereby need to report on their biodiversity risks, which is why we also see a quite flourishing landscape there, for example, around biodiversity data. Then the ISSB, the International Sustainability Standards Board, which also is working on its own standard at the moment, specifically on sustainability at board, as well as climate, but it has also announced plans of incorporating water biodiversity and ecosystem in its work on future standards. And here specifically, it also aims to draw on the work of the TNFD. So the TNFD is really moving into a central position here, influencing a lot of the standards at work. This is also true for the UK, where just on the 30th of last month, the UK adopted a new green finance strategy. And this strategy makes also clear that the UK government is currently underway of exploring how to best integrate the TNFD into its policy and legislative architecture. So here we are really expecting policy to also move ahead with a specific view to the TNFD. And if we now turn our attention to the next slide. Thank you. This is just a couple of things for you to note down in terms of how this will evolve. We are expecting the ESRS, so the European standard, to be adopted in June, similar to the ISSB one, as of now not focusing on biodiversity, but on climate and sustainability. We are expecting the release of the GRI version of biodiversity, so the revised version in also Q2 of 2023, as well as the science-based target networks to release its first guidance on targets for freshwater and land use. We will then expect later in the year, I've mentioned this now a couple of times, in September specifically, the TNFD to release its final framework, and the UK to somehow give us a bit of guidance on how they plan to move forward with policy around the TNFD. And then in Q1 of 2024, the French government to assess the effectiveness of their Law 2019-1147 that I just talked about. And with that, let's turn to another topic equally relevant in this space, and specifically also relevant with the question of how to align financial flows. And if we can turn our attention here to the next slide. Thank you. This gives you a bit of an overview of where taxonomies are currently either implemented or in progress. And as you see, it is a lot of taxonomies that are currently still in development. So quite a crowded space here, I would say. And if you look at the small leaves that you see here, those are all the taxonomies that are considering nature-relevant objectives. So those are also quite a bit. And for those that are not having those leaves, it doesn't necessarily mean that they're not considering this, but that we simply do not know, as they're just in their first proposal, essentially. Here it is important to highlight that all taxonomies are generally structured in a very similar manner. They all have objectives, then they have specific performance criteria that economic activities in certain sectors need to meet in order to be considered sustainability. And a lot of them also additionally define do no significant harm criteria, as well as criteria for meeting minimum safeguards. So those are the structural elements that we see occurring in a lot of these taxonomies. However, there are also significant differences from country to country or jurisdiction to jurisdictions. One is that specifically the objectives they consider are different. We also see that the level of ambition sometimes in the performance criteria differs, and we also quite specifically see that disclosure connected to those taxonomies differ, because here sometimes taxonomies are very product oriented, so they require disclosure at a product level versus company level, which is what we currently see in the EU, where this is more focused on a company as a whole. Also, the users differ quite widely. While the European taxonomy is quite targeted towards the equity market, here a lot of the taxonomies developed in the global south are rather targeting the debt market. So this is important to keep in mind as we are seeing those different taxonomies evolving. And with that, we'll turn our attention to the next slides, where I just quickly wanted to illustrate the points I've made using 3 different taxonomies, which all provide a different interpretation of also nature. And here, let's first focus on the EU. So regarding the objectives essentially that we see here, which is climate change mitigation, adaptation, water and marine resources, circular economy, pollution and ecosystem and biodiversity conservation. This has really been the inspiration for a lot of taxonomies around the world. So if you look at the K taxonomy, that is the Korean taxonomy, we see the exact same objectives here. So those have generally, the use objectives here have been quite, an inspiration to other jurisdictions. However, as I also said, the EU is currently one of the few taxonomies that is really targeted towards investors, so really targeting the equity market. That is not true for Colombia, which is targeting the debt market, as well as for the K taxonomy, which is also more geared towards green bonds issuing and green project finance, which is also a little bit more the realm of the Colombian taxonomy. So in the users, the EU taxonomy is really special. Then the Commission just proposed technical screening criteria last week with providing an extra set for all activities that are non-climate related. However, quite specifically, a couple of sectors that were controversial were not included in this. And those are very relevant to also the nature sphere, specifically agriculture, foresting, and fishing, where this will be up to further assessment. And this is, for example, where the Colombian taxonomy comes in, that we see in the middle here, which really has the objective of land management, because of course land use change is a huge source of pollution in Colombia, and to also really essentially tailor the Colombian taxonomy to this context, it specifically considers those land management activities, and thereby is a customized version, at least in its objectives, of the EU taxonomy. And this is really nicely shows how we see similar structures, yet how different objectives are taken in different directions, and how this is also aligned with the national sort of circumstances. With that, let's also take a look at what we can expect here. And we had, like I said, the technical screening criteria just being adopted, also a second version of the ASEAN taxonomy being adopted just in the beginning of this year. But as you can see here, a lot of taxonomies are planning to move forward this year. This is specifically Singapore, Canada, Thailand, the UK, and then we are expecting at the end, towards the end of the year, the technical screening criteria from the EU to still be adopted and put into a separate delegated act. With that, let's take a quick final look at how this emerging landscape is really shaping out. And this I put together to illustrate a little bit how biodiversity is really building on climate and how the TNFD really can become a central point in this. You see here the 4 pillars, which those of you that know the TCFD are quite familiar with, and that is disclosure and governance, strategy, risk management, and metrics and targets. And on the right here, you see different initiatives that are still in evolution, but are really trying to give a more detailed approach to some of these areas. So for example, we see Nature Action 100 here as an initiative for engagement, Finance for Biodiversity Pledge, which is working on targets similar to the Science Based Target Network, and the PBAF, which is parallel to the PCAF, working on biodiversity accounting standards. And with that, I will hand over to Maria, who will give us a short overview over risk management in this area. Thank you.
Maria, I think you're muted. No, I don't think we can hear you yet.
Maybe Maria, leave the Teams chat.
Okay, now can you hear me?
Perfect.
Yes.
Awesome. Sorry, I was just trying to find a mute button. But yes, thank you, Lana, for your presentation. And now I'll be happy just to give a quick overview on when we're talking about biodiversity considerations into supervisory authorities and central banks and how they are integrating these into their recommendations and also their guidance for financial institutions. Just before I start, I want to quickly clarify that when we talk about, because we're looking at biodiversity related risk, when we talk about the risk and the implications, we refer to economic and financial implications rather than all the impacts that biodiversity loss may have in general. So here in this first slide, I want to just quickly go through the work of NGFS. And for NGFS, biodiversity is not, or an environmental source for macroeconomic implications is not the first one they look at. They did that for climate change a couple of years back. So here what they did 2 years ago is they developed or set up a group that were supposed to look at the implications for biodiversity laws for central banks and also supervisory authorities. And that work culminated last year in March, as you can see here, with a final report that is quite long. It's 100 pages long, but they provide 5 key recommendations, as you can see on the right, also for central banks and financial supervisors. And these recommendations go from recognizing biodiversity loss as a source of economic and financial risk, and also failure to mitigate and adapt to this, which lead to potential implications for financial stability. So, and that also these recommendations refer to building capacity to also explore and assess the exposure that institutions have to biodiversity loss, also by setting up the necessary, like, proper financial infrastructure to mobilize investment to a positive, biodiversity positive economy. And then with that, I just, in the next 2 slides, I want to quickly go through some examples that I took And we have here the ECB and also the EBA. I know it's a lot of text in the boxes, but what we're trying to look at is these biodiversity considerations. So these are the examples of the guidance and recommendations that we've taken, and what do they include or what do they describe regarding biodiversity considerations. So both of them, as you can see, recognize that biodiversity presents a risk for financial stability, and that they're also trying to assess how does this risk translate into financial numbers. And we're talking about in the short, medium, and long term. What the EBA, for example, does also establishes this and recognizes these interlinkages between biodiversity and climate change. So they recognize that this cannot be tackled in isolation. And then in general, what this guidance does is just try to provide recommendations on how to integrate environmental factors. And within these environmental factors, there is biodiversity loss and protection as well. Just a quick note, what I see interesting with these documents, I mean, we saw the work of NGFS, right? That started in 2021 regarding nature and biodiversity. And here we see these documents that go back to 2020, also 2021, and even 2019 when we see the other slide. So this is mainly because they have considered environmental factors from the beginning. And within this within this E of ESG, there was the inclusion of biodiversity protection or biodiversity loss to take into account when assessing risk. And then quickly, we have here also the German supervisory authority, the Dutch Central Bank, which a colleague will talk about with more tangible examples in a minute. And then we have also Singapore. And again, going back to what I mentioned in the previous slide, all of them recognize that biodiversity loss has economic implications and could lead to financial instability. And then we talk about the use of scenario analysis and stress tests to assess how these risks translate into financial risk. And just some key takeaways before I stop these slides. There is recognition and consensus that nature-related risks, include those of biodiversity loss, could have significant macroeconomic implications. So there is everyone recognizes that action to mitigate and adapt to these risks are necessary. Then as a second key takeaway, we have that there is increasing understanding about biodiversity-related risks. So we're talking about impacts and dependencies, but not only that, but institutions are starting to connect and recognize the interlinkages between climate change and biodiversity issues, so they can tackle this in conjunction. So we're starting to see the institutions disclosing climate-related disclosures and including biodiversity in there. And then at last, as we also see, as the Dutch Central Bank does and recommends, as well as the German one, German Supervisory Authority, I mean, institutions are starting to build on existing knowledge regarding their experiences with climate-related scenario analysis and stress tests, and they're starting to include biodiversity-related considerations into these tools to just have an overview of how this looks like, how does this portray in a financial risk. So with that, I'll be happy to hand it over to my colleagues of the Dutch Bank and the La Banque de France. Thank you.
Thank you so much, Maria. That was very comprehensive, and I'm not surprised that participants are asking for slides to check back in. Thank you so much. And I think the last part, especially on risk management, on supervisory expectation, is a brilliant way to hand over to Marie. We're very lucky to have two central bankers with us today to speak firsthand on their thinking and developments at their institutions. And both of them not only speaking on behalf of themselves, but also as members of the NGFS. In Marie's case, even the case of France hosting the NGFS Secretariat, so no better person to speak on this than her. So over to you, Marie, to share some thoughts on current practice and perhaps what to expect in the near future. And I think you're muted, Marie, so double checking.
Yeah, sorry. Can you hear
Great.
me now? I had
Yep,
trouble unmuting
fantastic.
myself. Perfect. And can you see the presentation? Yeah? Alors,
Yes.
Yes.
perfect. Perfect. So I'll start now. So I'm going to go through as comprehensive as possible a picture of what the Banque de France is currently doing regarding nature-related financial issues, and talk briefly about what the NGFS does, knowing also that shows that Will is very involved in the NGFS work on nature, so he might be able to broach on the subject a bit more. So as a quick overview, Banque de France, we've been addressing nature-related financial risks and topics through several fields. So through research, we'll an impact analysis of our portfolios in the context of our responsible investment policy, and with investment coordination work. So that mainly means the NGFS. So first of all, I'll briefly talk about one of our key research works that was conducted in cooperation with the NGFS or City Biodiversity. So this is the working paper, A Silent Spring for the Financial System, that was published in 2021. And so in this paper, researchers have taken I've looked at securities held by financial institutions, and you measured the dependencies and impacts that were related to that portfolio of security. And so they approximated physical risks for French financial institutions by assessing the dependency and transition risk.
Marie, I think you're breaking up a little bit, Marie. Maybe it would help to log on and log off again. Stuart, not to try to put you on the spot, but in the interest of time, should we maybe swap and have you go first to allow for Marie to just double check the connection? It was fine earlier, but yeah, just to make sure we get the points across.
Okay, so you want me to? Okay, perfect. Well, whatever you prefer. Should I can just maybe try and close a few windows? Do you hear me now?
We hear you fine.
No.
Okay, let's try one more time. That's much better.
Okay, tell me. Okay, much better. Okay, so I was talking about the study Silent Spring.
Just to save the connection. Thank you, Marie.
So you want me to log off and on again?
I think if you just switch off your camera, that might save some bandwidth.
Ah, that might indeed. Alors, let me just try and just switch off my camera. Better like that, maybe. I'll try again.
Yeah, sounds
Sorry
good.
about that. Okay, so okay, no glitches now. Better. I'll try. Do tell me, Laura, if there's anything that goes wrong again. So for the working paper, results for dependencies of the portfolio to ecosystem service is mainly that 42% of the value of securities held by French financial institutions were issued by companies highly or very highly dependent on at least one ecosystem service. And that 9% of the values of the securities are very highly dependent. As regards the impacts of the portfolio in biodiversity, so we did both a static and a dynamic assessment. And so the static biodiversity footprint was comparable with the complete artificialization of 24% of the area of metropolitan France, so what the red spot that you can see on the map. And for the additional biodiversity footprint, so that includes all value chains, it's the equivalent of the complete artificialization of the Loire department, so the in red on the maps. The science that also provide avenues to go further and help central banks and supervisors on assessments. Our other kind of nature-related work is also our supervisory work. So ECOFACT colleague briefly touched about the French law, Loi Énergie-Climat, and its Article 29, along with an implementing decree that was passed in 2021. So it requires information on the strategy of alignment from various supervised entities. So this is mainly life insurance companies that have more than 500 million euros banks with investment activities or portfolio management, portfolio management companies. So it's not only insurance. So the ACPR as a supervisor analyzes reports published by targeted supervised entities. For the latest exercise in 2022, it showed that 30% companies are taking nature-related issues into account, so a bit of room for improvements. And also at the European level, we have the SFDR regulation and the upcoming CSRD regulation with the ESRS E4 standards that will also do a bit more for biodiversity-related disclosure. Also at the ACPR, what we do as supervisor is maintain a dialogue with supervised entities through a committee that we have, an advisory committee on climate and sustainable finance. So that committee has a biodiversity working group that meets on a frequent basis and exchanges. So we invite people from some financial institutions or some people from the Banque de France to share about what the financial institutions need from us as information and what we can provide them with. And also internally, we monitor the upcoming regulation taxonomy changes that are going to go through at the European level. Other nature-related initiatives from the Banque de France include research work. So in addition to papers, working papers like Silent Spring, we're publishing articles that are available online on nature-related risks, nature-related topics. We organize research conferences. So in October, last October, we organized a research conference on the frontiers of climate and nature. We also, as I briefly touched upon, have a responsible investor policy, and in the context of that policy, we monitor 3 different indicators for our portfolio of unfunded and pension investment, and including biodiversity footprints, and also, as you see on the graph, total absolute biodiversity impact of our portfolio. And we also do trainings for central banks and supervisors. So we have an international banking and finance institute because it's important for us to contribute as much as possible to capacity building and awareness raising. So through what we call IPFI, International Banking and Finance Institute, we provide trainings, including on nature, to interested central banks and supervisors. What we consider could be challenges in the next step at the Banque de France. So taking into account, as was mentioned, the upcoming legislation and taxonomy changes. For example, so beginning of next year, the French government will review the Loi Énergie-Climat. And the fact that potentially this law is going to be applied to more and more supervised entities, including more and more banking entities. A challenge that we also identify as Banque de France is collecting and analyzing more data. So the ECB does climate and environment CNE thematic review. So that's something that we could maybe do in the future as supervisor at the national level, including biodiversity disclosures. And also one of our key challenges and the next steps that we're implementing is cooperating with other central banks and supervisors. And that includes the work of the NGFS that I'm now going to briefly touch upon. So ECOFACT colleague talks about the way that was paved for the NGFS to really tackle nature-related issues. So with the NGFS Inspired Study Group, and following the reports of that group and a statement by the NGFS that nature-related risks were material and had to be taken into account. The NGFS set up a task force on nature-related risks and biodiversity loss. So the task force is co-chaired by Emmanuel Assoin from the Banque de France and Saskia de Vries from the Dutch Central Bank. And it counts around 65 members. And it's a task force, so it's one of the NGFS working groups that is not permanent, so it has a brief life duration. It's supposed to last for 2 years. And the point of the task force is really to work on nature-related issues and allow them to be mainstreamed into the permanent work of the NGFS. So as you can see on the slide, the task force explored nature-related issues in connection to climate stakeholders such as the TNFD or the G20 and its Sustainable Finance Working Group or the Coalition of Finance Ministers for Climate Action. Currently, so the task force has a by nature flexible structure, but currently we have 3 teams according to the 3 main areas of work on nature for central bankers and supervisors. So one is the mapping and engagement team that aims at getting a view of the existing know-how and best practices among NGFS members and external actors to capitalize on it. Another one is the conceptual framework team that is led by Sjoerd van der Zwaag, who will talk later maybe a bit more about the conceptual framework. But the goal is to provide NGFS members with common understanding of key definition and drivers for nature-related risks, so they can assess them from a common NGFS perspective. And we also have a scenarios team that aims at exploring the possibility to develop nature-related scenarios, just as there are NGFS climate-related scenarios, but taking into account the particularities of nature-related issues. So that was briefly the work of the NGFS task force. And in the future, so we have key deliverables that we want to finalize. We want to really engage with external stakeholders, the ones I quoted before, and mainstream the work of the task force in the other permanent work streams of the NGFS. And I think that was all I had to say, and I hope it wasn't glitching too much. If so, I'm happy to take questions if there's anything that wasn't unclear. And thank you very much.
Thank you so much, Marie. The second half after the was definitely better, at least for me. I heard you fine, and I think not much to say other than to hand over to Sjoerd, which is the perfect connection to keep talking about what might be coming up at the NGFS, but also more importantly to hear the latest insights in the Netherlands. Over to you.
Thank you very much. Hope audio is all right. I'll switch off video soon. Lucky to have 2 central bankers. It's not a line you often hear at parties, so I'll do my best to entertain. I'll share the slides, see if that works well. 1 moment.
We can see your slides.
Fantastic. Then I'll get started. So brief introduction, Sjoerd van der Zwaag, working at the Dutch Central Bank in our Sustainable Finance Office, the unit responsible for coordinating all sustainability work. There I am responsible for all elements related to nature and also indeed active for the NGFS task force. So from that perspective, I'll share some of my own views on the issue. What I'll do is I'll briefly look backwards to our study in data to nature, then discuss some of the current work, and then finally conclude with a view on the road ahead. So I think it was already mentioned, the study in data to nature. It's a study we did in 2020 in collaboration with our environmental agency, where we were the first central bank to really quantify the exposure of the Dutch financial sector to biodiversity loss and related policies. I think that its origin was in a study before that called Values at Risk, where we essentially took the approach where we saw this transmission channel for climate being the physical and transition risk, and we thought, can't that apply to other sustainability risks as well? And this study was the outcome for that for biodiversity. And the result was that, I think many of you are probably familiar with it, that 36% of the examined portfolio, so 510 billion, was invested in companies that are very highly dependent on nature. Clearly, that's a very important finding. It's also a very limited finding because it only looked at first order effects. And in that sense, it really is a start rather than an endpoint of the discussion, but I think an important start. And something which is sometimes a bit overlooked is that it also looked at a few transition risk scenarios. So I highlighted 2. So financing companies that were involved in controversies or exposure to companies that are heavily nitrogen emitting. And we also examined scenarios in a 24% or 30% protected earth situation. I think that the main message here is that it's relevant, it's material, so that's something we broadcast. And second of all, there's enough data to get started with these analysis, and I think that's an important point to make. Already in 2020, we were able to do these initial studies. Maybe then moving on to current work. So that for us was an important starting point of the work. I think it's important to note that since then that we also host a sustainable finance platform. So it's a platform together with government, with financial sector, where we try to figure out how we can promote sustainability within the Netherlands using our convening power. And that platform has a biodiversity working group, largely made out of private sector participants. And they publish all kinds of interesting material, let's say on an e-learning tool, concrete knowledge on regenerative agriculture, deforestation, a guide how to move from pledges to action. So there's really a lot of private market active involvement in that space. But even though we see this awareness of the relevance of sustainability risk and many of these initiatives, we also note that they have not yet adequately embedded these sustainability risk into their risk management cycles. So this followed a more in-depth analysis we did, I think 1 or 2 years ago, where we looked at the state of play and we came to a similar finding as the ECB. So in light of that finding, we now push harder to make it part and parcel of our regular supervision. And as a first step, we recently published a guide on climate and environmental risk, in which we reiterate that these are material risks from our perspective. Now, clearly, this guide doesn't cover banks because they're covered by the ECB, but it covers institutions like insurers, pension funds, payment institutions, etc. So in 2023, so this year, we'll survey a select group of institutions to figure out how they work with this guide and what we can learn from that. Use that to better integrate it in our supervision and to strengthen this guide, planning to include it in our annual survey starting 2024. So this is really the move from explorative work to policy formulation that's taking shape. Now, this was all national. Clearly, we're also very active in the NGFS context. Marie already touched upon that, so I won't dive into the detail of the overarching structure. Just to say that Saskia de Vries is there a co-chair from DNB's perspective. I'm one of our advisors, and I think for us, it's another way to showcase that you can't do this alone. You need to collaborate with others, including the other central banks. And one way in which we do that is to actively contribute to this work. And I have the pleasure of leading a fairly large group in developing this conceptual framework. And what it does really, I think Marie described it well, is to give a common language to discuss nature-related issues. Because what we find still is that people speak about the same thing using different words, or maybe look at a problem in different ways, and then it's difficult to find each other or to collaborate. So really aiming for a very concise document, really to create some sort of backbone for all the work that will come, hopefully. Also, a document that's very actionable to help the NGFS and its members to take action in this space. And I think that's our mission. It's not an easy one, but I think it's progressing well. So hopefully more to come on that front soon. Some thoughts on the road ahead. A few things that we're doing at the moment, first of all, is figuring out how we can move from this more static exposure analysis to a more refined scenario-based assessment of risk. So currently our financial stability department is doing this. So trying to develop these scenarios, figuring out what kind of financial impact biodiversity loss and related policies could have. The emphasis will likely be more on transition risk because we now have the anchors of the global biodiversity framework as a concrete starting point for these scenarios. And we hope to finalize that work by the end of this year. Also, practice what you preach. So aside from doing this research and figuring out what the market is doing, we also need to reflect nature loss in our own operations. And one way of doing that is to figure out how we can take nature-related financial risk on board in the management of our own reserves. Third part, so we have the sustainable finance strategy, and I think where we previously looked at these issues more in isolation, you see this figure on the right-hand side. We try to stress the interconnectedness between issues more, including the connection between nature and climate. I think that the benefit of breaking up is that it becomes manageable, but the downside is that you might lose some of those key connections that are important to make the work efficient. So figuring out how to break that up in different ways, I think, will be part of the work ahead. And then finally, dialogue. As mentioned, you can't do this work alone. You can't do this from just a European perspective. You need the other dimensions on board as well. So that's why we heavily push for the importance of this work and seek to collaborate via the platform I just mentioned in the Netherlands, via the NGFS, and we'll likely keep on doing that to broaden this base for action. I want to conclude on that basis and leave more room for questions if there are any. Thank you very much.
Thank you so much. That was brilliant. And yes, I guess the conversation on sustainable finance policy and regulation around nature cannot be complete without finally hearing from the industry. So, I mean, we heard Stuart just mention that regulators are beginning to move from the exploratory phase to policy formulation. So, with that in mind, Rona, I think we're really curious to hear how banks are handling all of this and what how this is changing practice within your institution and more broadly.
Yep, absolutely. Thank you. And afraid I don't have slides to share today. I prefer just to talk through kind of what we're doing so far. But there's a lot more detail on our investors website. So just to introduce myself, I'm Rona Turnbull. I lead on climate, environment and emerging issues within NatWest. For those that maybe aren't familiar, NatWest is a predominantly UK-focused bank with some activity into Europe. And my role within the organisation, part of that is looking at how do we kind of enhance our approach around nature and biodiversity alongside climate. So as we've heard from the previous speakers, there's a huge amount of activity happening across different geographies. And given that we're kind of from a UK context, we're maybe not as developed as we're seeing in Europe, but that doesn't mean that some activities aren't impacting our business. So our NatWest Markets business that operates within the Netherlands and France is being impacted as with some of these existing regulations that we've already heard of so far today. So within that, we've started to look at how can we better understand where the impacts are both of the bank on nature and then equally of nature on the bank, so double materiality, which has been covered already. So within 2022, our markets business started to look to identify where these impacts are and understanding kind of the risks within that. From a UK perspective, we heard from Sarah Breeden, who leads the Bank of England's work in this space last summer around how they're looking at existing climate regulation and how they can see where nature and biodiversity sits within that, and then what aspects of nature and biodiversity will sit outside of the existing climate supervisory statements and requirements. So we're still in a moment of waiting, but that doesn't mean that we have to wait before we can start to think about what it is that we're actually going to be doing going forward. So we've obviously heard from a disclosure and reporting perspective a lot around the TNFD, which obviously builds on the success of TCFD. And within our ESG supplement this year, we've reported against these standards for the first time at a very early stage, I think it has to be said. But it's using these tools and frameworks that are built on kind of beta testing to really understand what this could look like in the future for banks and other financial institutions, as well as large corporates and others. And we've also heard of the kind of reporting standards such as ISSB and how they're looking to incorporate nature and biodiversity into their approaches going forwards as well. Something that's perhaps a bit more unique to the United Kingdom is the climate transition plan requirements that are coming in, focusing on large corporates. So this is large organisations having to disclose how they intend to meet their climate commitments. So from our perspective, that's how are we going to halve the climate impact of our financing activity between 2019 and 2030. And as part of that group, you have the Transition Plan Task Force, which has been run through the Treasury, the government's Treasury, and our CEO sits on the board of that. And within that, they're looking at what fundamentally could this look like? What does a transition plan need to include? How does that interrelate with TCFD, with also the emerging TNFD? And then also, how do we think about nature more broadly within that? And there's substreams on that. So there's a lot of guidance and kind of examples of best practice beginning to come out of that group. And you can see it in other organisations like collaborative groups such as GFANS and some of the other kind of programmes as well. So it's great to see that kind of emergence come through, and it's kind of what are those best practice ideas. From an organisational perspective, we've been, since 2020, we set up our internal emerging environmental issues working group. So pulling colleagues from right across the organisation, so customer facing and back office, to identify how can we better understand our climate, environment and emerging risks, but also opportunity. This is very important, that this isn't just a risk issue, and how can we work with our customers to help them better understand. And in some instances, customers will have a much better understanding than we will. So how can we engage with them? A year later, so in 2021, we formally recognised biodiversity and nature as a formal emerging risk within the bank. So that means that there's a lot of reporting internally, and it goes up to board. So there's that kind of formal recognition of how serious this issue is and what do we therefore need to do through management actions to address it over time. And I think the last comment will be very much focusing on the importance of collaboration. So as others have mentioned, as an emerging space, this is something that we cannot do individually, and we need to work with others to move this forward. And a few examples I'd like to share would be firstly the soft commodities compact, so looking at deforestation within banking supply chains and financial institution supply chains. There's been quite a lot of focus on this. We know that we cannot achieve our climate ambition without halting deforestation, and therefore what we need to do is to find a common standard to better understand what's happening in this space and how can we engage with our customers. So obviously, as I said from the outset, we are very much a UK and Western European focused entity, but we do have, through some of our customers, impact into tropical regions as well. So the Soft Commodities Compact was working through the Banking Environment Initiative, which was run through Cambridge University, and was a collaboration of different banks and academia who do voluntary reporting on what's happening within their supply chains. And whilst this project has now kind of come to completion, we still voluntarily report using that standard because we see it as kind of best practice as we are waiting to see TNFD and other frameworks coming through. Another really important thing for us is forestry and fisheries and agribusiness. So we bank about 1/3 of the UK's farmers, and there's very clear links between what's happening with agriculture and nature and biodiversity. There is a data gap, but that's not a reason not to do anything, and therefore I've been working with the Sustainable Foods Trust and trialling their global farm metric, which looks at climate and biodiversity and nature alongside other key indicators, including social topics, to better understand and support our farmers, especially those that are kind of smaller scale, and to kind of build up that database so we can work out how we can better support those farmers to transition and to better protect nature and biodiversity. So there are just a few examples of where we're collaborating. We see collaboration across the market being a really important way in which organisations can work together to move this forward. But it's been really great to hear all the different initiatives that are happening across the world at the moment, and to take that learnings and best practice and put them into practice ourselves.
Great, thank you so much, and encouraging to hear that that nature biodiversity has been recognized, at the very top of the organization. And yeah, thank you also for joining at the very last minute, Rona. It's great having you. So with that, I realized there was a lot of information thrown at you, but we do have some time for Q&A. So I will open the floor to questions at this point. I have lots. I also have some noted down, but of course I will let participants go first if there are any. I don't see any burning questions in the chat, but is there anyone who would like to go first? Lucky me, so I get to go first. Rona, you touched on customers in the tropics, and I think that raises a really interesting question for the panel, which is the fact that we have this discrepancy and this conflict, that we have regulation targeted at the global north, but we have a lot of nature and biodiversity that is intended to be protected through this regulation in the global south. Do you share the concern that this is a dilemma, and how fit is regulation that's currently being thought through to address that? And I guess in particular the question on the extent to which the NGFS can play an active role here. Maybe back to you, Rona, but also opening up to the panel as a whole, and encouraging you again to post any questions you may have in the chat. Yeah, or speak up. Sorry, go for it, Rona.
That's all right. So I think the kind of, as I mentioned, this is a very small proportion of our customer base given our geographical limits. But the way in which we have been doing this is to look at certification schemes. So where are these customers made commitments to publicly disclose certification schemes, so we can access the data kind of more broadly. So it could be say for palm oil, or like looking at roundtable membership, or FSC for timber and paper and pulp, etc. So it's looking at what are those existing standards. This absolutely isn't perfect. There are lots of issues with it, but it's a good first step in understanding kind of what can be done with existing available data that can be used as proxies, whilst we work out kind of what a better, more sustainable long-term way of doing this could be.
Yeah, indeed. I think we do have the kind of the principal agent issue here, right? And also the issue of supply chains, I guess that doesn't just pertain to biodiversity, but more broadly. Sierra Marie, do you have views on this, and especially how is it something that is being discussed in the NGFS context as well, where you do have, I guess, significant membership from the global south as well?
I can jump in, and maybe Marie, you have something to add. I think maybe there are a few points to make. One point we haven't touched upon really that much, but which is critical in my view, is government action. And clearly, when it comes to regulation, we can only do so much when it comes to supervision or research, all the activities that we do. We need that policy clarity. And I think the GBF was an important step, but it will be critical how that will be implemented. So for us, something to keep in view. I think one point we have to recognize is that divergence in jurisdictional context. So I think what we try to do in the NGFS is try to create this common approach so we can help each other, but also leave enough room so that people can start from their own starting point. And I think that's important because those contexts differ. And maybe the final point I would like to make is that I think the point we also try to stress is that what happens across the border matters. It matters because ecosystems affect each other. It matters because risk transfers to supply chains. It matters because in the end, it might affect global financial stability. So in that sense, we're all in the same boat globally speaking, which re-emphasizes the point about global coordination that I try to make.
Yeah, I just totally agree with everything she would say. I think it's important to further cooperation, and I think we do take it into account, but we are really policy takers at the NGFS, so we really look forward to being policy regulation, to what's going to become of the global biodiversity framework. And also, I think at the NGFS, we also, in our work, really try and take into account the whole issue of value chains. For example, when discussing what nature scenarios could be, we do have in mind the fact that there are really important differences between the north and the south, and that we have really to materialize it in if we want to do coherent nature scenarios.
Yeah, on the note on materializing, I see two questions in the chat about measuring exposure from Lisa, and also one on calculating economic value and ecosystem services. Maybe thanks, and I think you're already plugging some answers into the chat. But I think again, Rona, would be interesting to hear from you how you tackle that, whether there's anything you can recommend in how you've worked with any of those, and of course again the inevitable discussion on the nuances in attaching a monetary value to something that we all know has a lot of immaterial benefit as well. But for what we can do and where practical tools do exist, that would be helpful to understand. Yeah, maybe I'll start with you again, Rona. Thank you.
Thanks. Yeah, so as people have mentioned on the chat, there's quite a few publicly available accessible tools that you can trial, and that's definitely something we've been doing, is having a look to see kind of how these relate for our customer base. Do they give us a level of granularity that we need? And how does this work in terms of informing our decision making, and ultimately how does this help us understand better how we can support our customers? So I think it's around trying different things, and then using that to inform a decision as to how you want to take this forward. I think a broader question that some are tackling at the moment is how does this interplay with the work that's already been done for climate? So I think for ourselves, it's quite clear that we very much want to integrate nature into climate. There are absolutely key interdependencies between the two, but then also we have to recognise that for some specific sectors and some specific projects, there may be things where we see that climate and nature and biodiversity outcomes require different approaches and actually are not are in conflict with each other. So it's working through some examples in practice, and then utilising the tools to trial them to see which give us the best granularity for what it is we're actually hoping to be able to do, which is fundamentally engaging with customers at the end of the day. So no kind of one nice answer, I'm afraid, but there's a lot of really interesting tools out there for different size and different types of companies.
Yeah, thank you. I have one more question. I also invite my colleague Romy to come in as a subject matter expert, if you have any questions. But on the note on engaging with clients, and maybe this is a question for ECOFACT colleagues as well, but we see a number of jurisdictions and regulators mandating mandatory transition plans, climate transition plans, of course. What do you see the chances being that this might become a reality for nature at some point as well? I mean, we see that oftentimes the conversation is not about seizing activities, tomorrow, but really working with clients and in assessing their readiness for transition. And we found that climate transition plans seem to be in the toolbox for doing that. And I wonder what the likelihood or the challenges around doing this in the nature space might be as well.
Yes, so with regard to climate transition plans, as far as I know, we currently see those mandated in the UK, Switzerland, and with the upcoming ESRS standard also in the EU. And the old SEC proposal also, at least if dependent on the fact if a company had adopted a scope 3 emission target, would mandate transition plan. We don't know what the new proposal will look like. But so it's not that widespread, I would say. Let's say it's predominantly Europe that mandates at the moment transition plans. But the ESRS, and I mentioned this earlier, for on biodiversity would also see transition planning around biodiversity, and this is quite specifically integrated into this standard, which of course is pending the final adoption of the Commission. But in the EFRAG proposal, that was certainly written into, also for biodiversity. But again, also the ESRS here really heavily leans on the TNFD and the work that has been done there, and always references back to this as further guidance. And I could imagine that the TNFD will also further work on this a little bit similarly to what they have done for climate, right, where they have also provided additional guidance with regards to transition planning, what this could look like, and then also for nature.
Thank you, Lana. Are there any questions from the audience at this point? No, good. Romy, any pressing questions from your side?
Thank you, Laura. Like everyone, I'm struggling with the equipment a little bit. So I've been listening quietly, and I think one of the questions that often comes to mind from my side on any webinar that we organize. So in the beginning, we asked through the Menti who's in the room, and I think predominantly we have a banking audience. So maybe a question to all of our speakers would be, you know, if you work for a bank that is new to this topic, what are your practical recommendations or next steps that you can take to better understand both the regulatory but also the market-led developments, and because I can imagine if you're relatively new that this could be a very helpful starting point. So I think that's basically my question to all of the speakers here.
Maybe I can start, and then the others can add to this. But I think actually that the work, and I've tried to also convey this earlier, the work that the TNFD is putting together in terms of disclosure, also in terms of advancing our understanding on nature-related impact dependencies and risks, is crucial. A lot of regulators are either already referencing this, even though it was still in early stages when a lot of these proposals, for example, like the EFRA came out, they're already specifically referencing this. And the UK was the latest country to really explicitly put this into their green finance strategy, that this is something they're strongly considering in their policies moving forward. So I think gaining an initial understanding of how the TNFD thinks about those three-dimension risks, impact, and dependencies is very interesting. Also in this focus to have a look at the LEAP approach. There has also been sector-specific guidance for the financial sector been issued, but really in getting an overview over this topic, which is so much more complex than climate, unfortunately, is a good start. And personally, I find that the documents are actually really nicely edited, so they're quite approachable in a sense. And following this work, although it's not yet final, is certainly a good start, as the general thinking around it won't do a 180. Yeah?
Yeah, happy to go next. Yeah, absolutely echo what's just been said around TNFD and utilising the LEAP approach. It is, yeah, it's incredibly helpful just to kind of start framing that initial thinking. And then if people are looking for like a particular report, I'd recommend the Cambridge Institute for Sustainability Leadership. They did a report last September looking at integrating climate and nature within business. So it's a great place to start to think about how do you, yeah, in addition to the LEAP approach, how do you start kind of on this journey?
Maybe Maria, sure. Do you want to take this one as well?
Marie, do you want to go first?
I think we may have lost her. At least I don't see her screen anymore. So
No problem. I can briefly respond. I think the 2 points I would make is first of all, you might be starting, but you're not alone, in the sense that I think there are many examples. So look at those examples, and a few were highlighted, and look for those partners in unusual places. We partner with our environmental agency, which held a lot of knowledge we needed. So look for those new partnerships, I would say. And then finally, I think one starting point would be some of the materials are highlighted by the Sustainable Finance Platform in the Netherlands, and then the Biodiversity Working Group, including the e-learning. So I'll put that in the chat just in case it's of any help.
Yeah, and sorry, I was indeed lost in terms of connection, so I caught up on what you would say, and I think I won't have anything more original to advise. I think the TNFD's approach as a knowledge partner at the NGFS, we collaborate with them and at the Banque de France level as well. I think the TNFD approach is really comprehensive and can help any kind of bank maybe get started on those topics. And maybe if you want to dig deeper and get maybe an insight of how the regulator is going to look at your risk, read reports like those done at the DNB by Van Torenal or the Banque de France one or the NGFS Inspire study that was mentioned to see maybe how these risks are looked at by supervisor. But the TNFD platform is a really comprehensive platform to start with.
Great, thank you. And I see a few links also being shared in the chat. Thank you for that. So
if I may just add one thing that I think is very important to keep in mind in this context is we are now seeing the first mandatory disclosure for climate only emerging around this year in a lot of jurisdictions, right? But biodiversity building on this whole climate effort is just moving, it seems, a lot quicker. And I think this is important to keep in mind, because we can leapfrog a little bit, at least that's what you say in technology, off of this climate effort.
Yeah, and I think this is one of the points that maybe also Romy will make in a moment in her remarks, that we really do see an opportunity to learn from some of the challenges that we see in the climate space, and indeed leapfrog or take a slightly different approach where that's relevant, where we have the chance to build on some years of experience in designing supervision and regulation around climate. So I think it's important to realize that this is an opportunity to learn from those years and apply it to nature and biodiversity accordingly. Unless I see any more questions from the audience, I don't see any raised hands and nothing new in the chat. I will lastly hand over to Romy Rödicke. She's associate lead of our nature team at UNEP FI, and she will leave you with some practical ways to stay engaged and update you on some of the work that the team is doing on nature. So Romy, over to you.
Thank you so much, Laura, and also thank you to all of the speakers for your insightful contributions, and for all of you that have been so actively participating on the chat. I found this a very useful webinar. So I think from our side also, as this is the first webinar that we're organizing with ECOFACT as part of a series together with the policy team, I very much appreciate that this is now a webinar where nature is taken as the first topic and not climate or social topics. So I think that's quite nice. And I think from my side, it also shows the shift. So I used to work for IUCN Netherlands, and there we had some conversations with the Dutch Central Bank ahead of their launch of the Indebted to Nature report. And I think we never expected at that time that the developments within the nature space would, really take off that quickly. So I echo very much what Laura said, that in a way nature might be behind 5 to 6 years to where climate is today, but will be picking up the pace much faster, partly because of the fact that we had the climate experience already, but also because the need is much bigger now with the number of species going into extinction, and the risk that creates for our global economies. So I think within UNEP FI, we always like to speak about this dance between the public and private sector, and to see how policy developments and private sector developments can enhance each other. So I think this is a space where this is taking place as well. So as UNEP FI within our nature thematic, we really try to be a gateway for financial institutions and bridge finance and impact, and really drive practical science-based actions. And we do that through mainstreaming, so among others, capacity building activities, assess and disclose. So 2 weeks ago, we launched a report with 42 financial institutions that pilot the draft TNFD LEAP approach, alignment of portfolios, so among others with banks on our PRB target setting guidance, which we're updating with a working group now, and we do that within a wider enabling environment, working on land, ocean, and water. I want to highlight two projects that we're working on now. One is together with the UNEP World Conservation Monitoring Center, or WCMC, and the TNFD, on which we're looking into different disclosure requirements, such as the ISSB, the EU CSRD, GRI, Natural Capital Protocol, CDP, and the Science-Based Targets Network, and how those can be compared among each other and how they complement each other. So that's something we're working on. And together with the policy team, we're working on a global landscape analysis for central banks and supervisors. So I think those are very practical things you can expect from UNEP FI in the next few months. So with that said, I want to give it back to you, Laura. Thank you all, and looking forward to the next session.
Yep, thank you, Romy, and thank you everyone for participating. Thank you especially to our fantastic speakers. Thank you for joining us and sharing your insights. We will indeed, this is the first of a series of webinars we'll be hosting on emerging issues. We hope to share a date for the second webinar, which will focus on really deep diving on transition plans in banking regulation. So we might come back to revisit biodiversity in that context. So we'll stay tuned for that. And thank you so much and have a great afternoon. Goodbye.
Thank you, Laura.
Thank you.
Goodbye.
Bye-bye.
Thank you.